Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 31st of July 2019 and we're covering the Fed's decision to cut the Fed funds rate by 0.25% and the reaction to the Fed Chair Jerome Powell's comments and answers to journalists' questions. The time is 2300 hours British Standard Time, as we have not only listened to Powell's questions and answers, but have also spoken to people we know in banking as to their response to what has happened today. With this in mind, we propose to run a relatively short video synopsis today, and a more detailed one will be published in the Inner Sanctum tomorrow. But the key points are as follows. The Fed has at last cut interest rates by 0.25%. Reducing the Fed's fund rate, or Fed funds rate, from 2.25 to 2.5 to 2% to 2.25. We stated in our weekly update on Saturday, quote, "The dollar index is already quite high, and depending on what the Fed does and what Jerome Powell says will affect that index. If we only see a 0.25% cut and a let's wait and see commentary, we could see the dollar strengthen further. Our view is that a path between the two will occur, 0.25% cut plus a wait and see, but willing to help the economy where needed statement given, and perhaps a side reference to future cuts ahead," unquote. Well, this is basically what has happened. Rates were cut by 0.25%, and the dollar did strengthen, with the dollar index currently standing at 98.57, up over half a point. Oh, how the dollar collapse fearmongers must be eating their words. Well, no, they won't. They will just repeat the same mantra again tomorrow, but will appear more accurate, as they have yet a higher level to call a collapse from. These are the very fear parasites who will wait for the index to go to 120, see it fall to 95 and say, "We told you it would collapse." Okay, let's get real. We don't really see it going to 120, but hopefully you understand the point. Powell made it very clear that future cuts would depend on three main conditions, either not improving or, in fact, worsening. The first is if a 2% inflation target is not achieved, because core inflation has been running as low as 1.6% over the past 12 months, and it is important for the figures to balance as far as the Fed is concerned for a 2% inflation rate to be hit. The second is to provide insurance against declining world or global growth continuing. In other words, the demise in global growth is a fear factor and is affecting manufacturing industry in the United States. And so a slight cut in interest rates will add to confidence. And this leads to the point 3, which is really to take account of the trade policy uncertainty. That is the uncertainty the public have and businesses have over the non-conclusion of the trade tariff war, particularly with China, but other countries too. So Powell has also made it clear from his answers to journalists, and we have to say we were quite impressed by some of the questions the journalists were asking, that whilst he can envisage more cuts, the Fed is regarding this essentially as a mid-cycle intervention, or, to use his words, adjustment, and not the beginning of a lengthy cycle of cuts. In other words, whilst unlikely, it is not out of the question that rates could, if current policy and easing works and a recession is avoided, go back up. Most journalists present were quite critical of the 0.25% reduction. We ourselves actually said we didn't really think it was needed at this stage. However, we did forecast that it would happen simply because of the statement Jerome Powell made to Congress just under 2 weeks ago. So going back, most of the journalists present were critical of a 0.25% reduction, citing that this is unlikely to change anything particularly. But Powell countered that with the comments that the Fed's policy during the year has in fact moved from raising rates to holding rates to cutting rates, which has to some extent maintained and buoyed consumer confidence and business confidence, which affects purchasing decision-making. So in plain English, he is saying that whilst generally the Fed is data-dependent, with rising incomes and jobs growth and reasonable GDP figures, normally the Fed would not cut rates. However, with concerns over China, the need to raise inflation, and to help protect manufacturers, in particular against global economic slowdown, by reducing rates, the Fed is engendering a degree of confidence into the economy. He also pointed out, and this is for those who believe in a major economic collapse tomorrow, that the Fed has a financial stability framework, which they did not have before the 2008 crisis, and that the key areas of valuation pressures, household borrowing, leverage within the financial system, and funding of risk were generally okay. But he was a little more worried about business borrowing, which has essentially, as we bankers say, gone off book, and now rest in market vehicles which could, to use his words, quote, act as an amplifier to a downturn, unquote. The conclusion basically is that the Fed has cut rates and may continue to do so in slow and small amounts. It does not envisage aggressive cutting, but will do so if the economic circumstances dictate or global growth turns down far more rapidly than envisaged. But overall, the Fed is generally happy about the state of the US economy, and it's their intention over the coming months to support that growth. There was also mention that, frankly, it is the Fed's policy, and we mentioned this in a previous video produced either yesterday or the day before, to prevent a recession occurring. In other words, to elongate that cycle, which we have all got used to in the past between a boom and bust economic cycle of 7 to 10 years, but to extend that cycle in the hope that a recession does not occur, and that this easing will allow further growth to spurt forward. Well, to be fair, the stock markets did not initially like the comments, as traders were hoping for a higher cut, or at least a commitment to a much more aggressive cutting policy. The Dow Jones closed down 333 points, although it was lower at one stage, over 100 points lower. So it closed at 26,864. And gold has fallen some $15 today to $1,415. And silver has fallen 35 cents to $16.27. So, all of those YouTubers who put up videos today claiming gold and silver will go through the roof after the announcement may perhaps should spend more time listening to us than Peter Schiff. Sorry, had to get that one in. Anyway, we are anxiously waiting for Peter Schiff's forecast of 5,000 gold this year. Yes, we are. We've stocked up and we're ready for the $5,000 gold so that we can sell it and make a vast profit. To be serious, yes, we will see $5,000 gold this year if there is a war with Iran and North Korea and no trade deal with China. Otherwise, Peter, $5,000 gold for 2019 is for the birds. Finally, we would like to congratulate Day Too Early, who, on our Discord channel, has won an ounce of silver. Well, actually, we sent him just over $16. We are periodically going to run competitions on Discord so that members can win the equivalent of an ounce or half an ounce, or in some cases maybe 2 ounces of silver. Or we may have what's called a money shower. So anyone who answers a question will get a certain amount of dollars divided between them. So if you're not a member of Discord, we seriously suggest that you do so. It could prove quite profitable. And finally, we promise to send out emails to all members concerning an opportunity to earn additional money, if they so wish, and it would be free of charge. Well, joining the Discord channel is one of them, and the other will be sent tomorrow and Friday. We have to spread the email. There's so many of you, we have to spread the emails over 2 days. Will be sent tomorrow and Friday, and not yesterday, as we had hoped we could have actually completed. Meanwhile, have a great day, and as far as we in the UK are concerned, good night, God bless, and we'll chat tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.